Hey everyone. Uber reported first quarter 2023 financial results this morning, and the stock is up an impressive 11.55% on the day of the announcement. Meanwhile, the overall broad market indexes are all down over 1%. So on a down day, Uber's stock is up 11.5%. So I'm really interested to share with you the figures that had Uber's stock jumping the way it did. And in this video, I'm going to review Uber's earnings results, and I'm also going to answer whether this 11% increase was justified. Okay, so let's begin. So total revenue increased by 29% to $8.8 billion dollars. The loss from operations improved to negative 262 million from negative 482 million year over year. Primarily, Uber did an excellent job of keeping sales and marketing flat year over year. So they didn't increase sales and marketing spending while they boosted revenue by 29%. So that was impressive. And this is something that I've held against Uber and DoorDash and Lyft and many of the companies in this space, is that severe competitive pressure in promotionary activity, and it's encouraging to see that the promotion coming down, right? The promotions coming down, because that's the way the companies will ultimately achieve profitability, is by not having to give out so many promotions to get customers, to attract customers. MAPC, which is how Uber counts monthly active customers, increased by 13% to 130 million year over year, but it was down from the previous quarter by 1 million. So that was a little bit troubling to see that the monthly active customers were down 1 million. The number of trips increased by 24% compared to the same time last year. That's not surprising considering that economies really gained momentum in reopening this year, and last year was really just when it was getting started. So you can understand that this year the number of trips was more than last year, and that's to be expected, right? Gross booking value increased by 22% year over year to 31.4 billion. Let me say a little bit more about gross booking value. Remember, Uber charges you, the customer, a fee for the rides, but Uber doesn't keep that entire fee, right? That's the gross booking value, the fee that they charge you. But Uber splits that fee with the driver, and Uber keeps a percentage, the driver keeps a percentage. The gross booking value is the overall price that the customer was billed. Okay, it's important because that the higher that goes, the greater the potential for Uber's revenue, right? Because then we get to the next point, which is the take rate, right? So of the gross booking value, mobility, which is the people taking trips. Remember, Uber has two segments, right? The Uber drivers, where you get a ride, and the Uber Eats, where you order food for delivery. The the ride segment increased revenue by 43% year over year, right? And in that segment, the take rate, the percentage that Uber takes from the overall, increased to 28.9%. That was up from 23.5% last year and 27.8% in the previous quarter. So big increases in the take rate from Uber, which is increasing the amount that customers have to pay, and it's increasing the amount drivers have to pay to Uber, and it's leaving less for drivers. Drivers cannot be happy about this trend, and I don't know how much longer Uber can continue to push this without angering a lot of drivers and causing them to switch over to another platform. The delivery GBV increased by 12% year over year. The take rate increased to 20.6%, up from 18.1%. So again, Uber increasing the amount it keeps for itself, leaving less for the drivers, and doing that significantly compared to the same time last year. So drivers pushing the limit on how much drivers can earn, and that is not likely to make drivers happy. And given how competitive it is right now for employees, for drivers specifically, I don't know how much longer Uber can push this, and I don't know if Uber wants to push this anymore, because there is companies, and I will tell you, number one, Domino's is sitting there chomping at the bit, waiting for any opportunity it has to bring back these drivers, right? Domino's is desperate for drivers. So if Uber pushes too hard, Domino's will be happy to bring back these drivers to keep them for itself, because Domino's needs these drivers and Uber does too. So that's the critical element here, to maximize Uber's take rate without alienating drivers and forcing them to move to other platforms to take on another job. Cash flow from operations improved to 606 million, up from 15 million in the prior year. So a huge boost in cash flow from operations, mainly as a result of Uber being able to keep costs under control while boosting revenue. I don't know how sustainable this kind of growth is, and I don't know how much of this is due to the pent up demand, right? Consumers right now are spending a lot more money on away from home activities, like going out to restaurants and bars and concerts and things like that, which helps Uber's ride segment. You could see that GBV increased by 43%, and that segment is more profitable for Uber. You can see the transaction take rate much higher in that segment, almost 50% higher than the food segment. And so it's getting the double benefit there from that pent up consumer demand, which I admit is probably going to last throughout 2023, because there's a lot of pent up demand out there. But I don't know longer term, when it'll snap back and Uber will start to see a leveling off of this area. But that's for another day to worry about. Right now, looking at these quarters results, there's a lot for Uber stock investors to be happy about. And the increase, the 11% increase in the stock price is certainly justified given the improvements in cash flow from operations, given how they were able to boost revenue by 30% while keeping sales and marketing under control. Given all of those factors, I totally agree with the market's reaction, sending Uber's stock price higher after the day of the release. All right, so that's all I've got for this video. Thank you so much for watching. If you want more earnings reviews, if you want more buy and sell recommendations, I've got a lot of that on my channel. Several videos published every day. If this sounds like something you want to get more of, please subscribe. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.